Yo guys, welcome. If you've been trading the same strategy for months now and you still couldn't tell me with numbers whether it works or not, this video is for you. Not because you need a new strategy, but because you never actually proved the one you have. I ran over 300 backtested entries before I even attempted a live entry. All of them logged, all of them tracked. 5 metrics, and it's not the P&L. And what the data showed me, it changed everything. Today, I'm walking you through the exact process. 4 pillars: structure, narrative, zone, and entry. Step by step on Forex Tester, the system that I still trade live. And somewhere in this video, I'm not telling you where, right? I have hidden a free 1-month subscription to Forex Tester Pro. You want it? Watch the whole thing. Let's go. So here's what the average trader does. They find the strategy on YouTube. They watch maybe 1 or 2 videos. They think they've figured out the enigma, right? They open up a live account the very next morning and they blow the account within the week. Then they blame the strategy, find a new one, and then does it again all over. I know because I was that guy. I blew account after account for 2 years straight. Same cycle. New strategy, but the very same result. And by now you're probably wondering, what finally broke that cycle? Well, I stopped trying to make money. I stopped opening the charts looking for an entry. I opened up my backtesting software instead. I said, I'm not taking another live entry before I have 300 trades on paper proving that I actually have an edge. Not until I feel like I have one, until the numbers say so. So here's what you're doing. This is a 4-pillar system: structure, narrative, zones, and entries. And I'm going to show you exactly how to backtest it on Forex Tester until the data speaks for itself. Before we touch a single trade, you have to flip how you think about backtesting. Most people open a backtesting platform and the only number they track is the dollar amount. Did I make money? Yes or no? That's wrong. That's not a backtest. That's a highlighted reel. In my foundation kit, which is free, down in the description below, no course, no upsell, I track 5 metrics. The rule adheres is percentage. Of all your trades this week, what share followed every single rule? This is the number 1 metric. The target for this is more than 90%. Nothing else matters until this number is high. Number 2, the journal completion percentage. Did you log the reasoning on every trade? The target for this, of course, is a pure 100%. A trade you didn't log is the lesson you threw in the garbage. 3, the backtest sample size. And this talks about the cumulative setups that you've logged. And a bigger sample size is literally the only thing that turns a hunch into an edge that you can actually trust. Number 4, expectancy. This is average hour gained or lost per trade across your sample. A positive expectancy means the process makes money over time, regardless of any single result. And the last, number 5, the payoff ratio. This is your average win hour versus average loss hour. Essentially means that your wins need to be bigger than your losses. And this is the quiet math that carries a trader through his losing streak. P&L is a lagging indicator. It tells you what already happened. These 5 numbers, they tell you whether your process actually works before the money shows up. Once I switched to these, instead of looking at my P&L every 5 minutes, my win rate went from, well, I'll show you the data in the end. Alright, so it's system time. SNDR on NQ futures. 4 pillars. You skip one and your trade is invalid. That's it. As you probably know, structure is the vocabulary of price. Everything, narrative, zones, entries, sits on top of structure. This is the bottom pillar. You skip this and everything else is noise. So here's what I'm looking at. Multiple time frames. You got the 4-hour, you got the 1-hour, 15-minute, 5-minute, and 1-minute time frame. The higher time frames set the story and the lower time frame times the entry. And as always, count your swings. Institutional swings, intermediate swings, candlestick moves, I'm watching all of them. So 3 rules of structure, and make sure to write these down. Rule number 1, we only want a body closure, not a wick, right? We focus on closures. A level is not invalidated if it doesn't have body closure. Rule number 2, counter only after the 3rd swing. I only counter after 3 or more swings have been established, and that goes same for no continuations after. So let's mark up some swing points, right? So we currently see this swing low on the 4-hour, means we are still in the bullish PA. Going down a time frame, we see there is a break of structure on the lower time frame. We see price traded through with a body closure above our what? Protected high. Okay, it established the second swing, right? So we know the lower time frame on the 1-hour is bullish. We are seeking longs. Going to the 15-minute, we see an MM being swept and price trading into the other direction, giving us that body closure above that high to validate that second swing. Going to the 1-minute now, we see a protected low just down here. That's how you mark up structure across time frames. Pillar number 1, can you read structure? If the answer is yes, you move on to the second pillar. If no, I don't see my zone, I close the platform, I go for a walk, I don't find something, I don't force a trade, I simply don't trade. So once you got the structure, you build the story. What is price actually trying to do? 2 questions that I'm asking myself every single time. 1, are we at the top of the range or are we at the bottom of the range? 2, which order flow are we currently in? Are we pushing higher or lower within this range? The narrative should only fit in 1 sentence, not an entire paragraph. 1 sentence. For example, price is at the top of the range, rejected, now pushing towards the bottom of the range. That's it. That's the entire narrative. You don't have to become a philosopher to build a narrative around what price is trying to achieve. You only need targets. Here's a rule that probably saved me more evaluations than I want to admit. Never trade against equal lows or equal highs. Price respects these, right? If you're fighting them, trying to short here, you're basically donating money at this point. Now here's where most traders mess up. They go from structure to the entry. Oh, structure looks good. Let me just jump in a trade real quick. You skipped narrative and zone. That's 2 whole pillars. That's why you're failing. Structure tells you what the market is doing. Narrative tells you what the market is trying to achieve. And zone tells you where to engage. Entry just tells you when. Skip a whole 2 pillars, you're gambling with extra steps. So the current price action, we see a protected low on the 4-hour here. We see that this is the bottom of the range. This is where we look for longs to go higher. Over here, we have the top of the range. Where are we currently? In the middle of the range. Currently with 2 swings to the upside, we are looking for longs, as we said before. Why are we looking for longs? Because we are rejecting from a 4-hour zone to the left. And obviously, we seek higher prices. Pillar number 3, the SNDR, or the supply and demand zone responsible. This is the zone responsible for the break of a protected swing high or swing low. Let me show you exactly how I find this. Without further ado, step number 1. Identify the break of structure. A protected swing high or swing low that has been broken with a body closure. And yes, it has to be a body closure, not a wick. Step number 2, trace the move back to the previous zone. Right? Where is the last down move before price came and broke that high? Step number 3, draw the zone. For the highs, we use the last down swing. For the lows, we use the last upswing. Step number 4 is wait. Price has to come to you. You do not chase, you wait. So look at this now. Taking a 1-minute SNDR for a 15-minute break of structure. What do you think will happen? Right? Usually results in a loss. You have to match the zone to your desired time frame, right? If the break of structure comes from the 15-minute, look at the 15-minute for a zone. Don't take the M1 zone for the 1-hour break of structure. That's a completely different entry. And the zone that you're choosing, right? It cannot have a mitigation to it already because then your edge just disappears. So 3 rules: no zone, no trade. Price has to hit your zone. If it doesn't, you don't enter. It's that simple. 2, stop is always behind the zone. Never, and I mean never, widen your stop. I don't care if you think this one is different. It's not. Number 3, entry under 50%. I use limits. And when price hits the top half of the zone, I'm in. And this is where Forex Tester is. Look, I can open up a new order. I can set my limit the stop is already predefined to the drawing, I can risk however much I would desire and it automatically counts my risk, and I can journal inside of the platform. And you can even make a screenshot of the current chart. It's everything inside one platform. The trade journal, the stats, the replay function, it's all built in. And I'm not jumping between 4 apps just to backtest. Now we're at the trigger, but before I click anything, I run a checklist. Every single trade, no exceptions. Is the zone valid? Check. Am I chasing? No. Price came to me. Is it after 10 a.m.? Yes. Or 10:30 if there's news. I usually never trade before 10. Skip the open chaos. Risk 2 to 3% max? Check. Is my stop behind the zone? Already set. Confirmation seen? Of course, there's a body closure below the protected low. And all we have to do is just execute the entry now. If any of those is a no, I simply just don't take the trade. The eval or the PAs will always be there tomorrow. You don't fail your evals or PAs on a losing trade. You fail them right after that losing trade. When you're tilted, when you widen your stop, when you over trade, when you revenge trade, when you size up. These are all the catalysts for blowing your account. And everything that happened after those catalysts is emotional vomit. And I know, I've been there. So this backtesting checklist is sort of the thing that keeps you out of being the problem. As I said, your strategy is never the problem and you just breaking your rules is. And until you fix that, no new setup, no new firm, no new course, no new mentor will help you. None of it will save you. None of it. And one more thing. I wait at least 30 minutes between each individual trade. Always let the head clear. A rush trade is a revenge trade, just wearing a different shirt. When the trade hits, boom, target, done. When it misses, GG's, log it, move on, next setup. The market is always offering another one, right? Alright, so you've seen the system, and let me show you the actual data. This is 388 recorded trades. Using this exact process, win rate and expectancy are both positive. Average win versus average loss is 1 because I was staking 1-hour trades. Here's the thing though, when I started backtesting this strategy, my win rate was not 80%. It was lower. My first ever 100 trades done in backtesting, my win rate was probably hovering around 55%. The next 100, mid 60s. Last 100, now we're talking about 80. That's not the strategy getting better. That's me getting better at following my own rules. And you cannot see improvement if you're not tracking the right numbers. And this is why I use Forex Tester. The analytics section shows you everything, from the win rate to the average R to your strengths and points to actually improve. Based on your data, it gives you points to actually improve upon. So you see me, it says that I should try aiming for better risk to reward ratio, so more than 1R. It says that I should consider cautiously increasing risk position size after winning streaks, and it would yield 27,000 more dollars. And also gives you your strength, right? That you're well aligned with your current strategy and show consistent profitability. Your risk per trade analysis is good. You don't revenge trade. You don't trade during news events. You know, it gives you all of these things that you're good at and all of these things that you could do better. It also gives you an exit optimizer where you can see the best possible take profit or just disable it and the best possible stop loss. When I follow my rules, the edge is there. And when I don't, it's not. That's the whole game. So what I'm saying is the single process, backtest first, track the right numbers, fix one mistake at a time. If I had this from day one, it would have probably saved me more than 50 evaluations at this point. Maybe even more. Here's the exact setup. So step number 1, get Forex Tester. Link is in the description below. But if you got the code earlier, you get a free month of Pro. Pick one model, not 3, not 5, 1. For me, it's the SNDR on NQ. For you, it can be Origin on Gold or NMs on EURUSD. For you, it might be different, right? Different pair, different model. But pick one and stick to it. Next, what I want you to do is backtest that model. At least 300 recorded trades. 100 is the floor. That's what it started to mean something. But 300, that tells the truth. A 30 is just a coin flip, right? Step number 4, track the 5 process metrics. Not P&L, we want rule adherence, journal completion, sample size, expectancy, and the payoff ratio. Every week, fill in the scorecard. And step number 5, fix the most expensive mistake first. Pull your last 20 trades. Find the mistakes that shows up the most. Write a rule down that would have stopped it. Make it specific, like for example, trade after 10 a.m. only. Not be patient, because a rule isn't real until you can measure whether you followed it. You cannot track patience. One rule at a time, don't write 10 rules at once, you won't keep them, right? So fix the most expensive one first and make it automatic. Then move on to the next. All right, so I told you that I hid a month of Forex Tester Pro somewhere in this video. If you found it, make sure to DM me the code and I will provide you with that free month. Make sure to write it down in the comments that you found it. If you didn't find it, watch it again or look around the 10-minute mark. Well, I don't know, I'm not gonna spell it out for you. And full transparency right now, I am an affiliate with Forex Tester. I wouldn't promote you something that I wouldn't personally use. No upsell, no course. If you want the foundation kit, the full PDF with 5 process metrics, the weekly scorecard, the rule building system, it's free on my website, link in the description below. I also built a free position size calculator that has helped many of my community members already. Here's the bottom line. You don't need a new strategy. You don't need a new firm. You don't need a new course or a new mentor. You need 300 trades on paper. You need to track the right numbers and you need to follow your rules. If this helped you, drop a comment down below. Make sure to like and subscribe, and if you want to join the free Discord community where we break down these setups live, the link is in the description below. Trust the trade and follow your rules. I'll see you in the next one.